Hey traders, it's Tex and Ads here with you once again for week 3 of the UTG Complete Beginner Crypto Trader Series. And this week we're going to be looking at how to master trend lines and making the trend your friend. We're also going to be tying this in perfectly with episode 1 and 2 about candle structure and support lines and how you can tie that in with trend lines to yield some pretty profitable trades. You can head over to unitytradinggroup.com if you haven't watched those videos yet. You can also head over there to jump into our Discord, ask questions and get answers in our dedicated beginner trader channel. So without further ado, let's get into it. And at the end of this video as well, we'll show you how you can use trend lines in real time to make some trades. So what are trend lines? Well, put very simply, trend lines are similar to support and resistance in the fact that they help us identify the direction of a trend and give us an idea of where the future price of a coin may be headed. So yeah, it's pretty simple. Consider them like levels of areas of support and resistance or areas of interest, like what we said in last week's video. They consist of an upward trend line, which is the bullish in a bullish scenario, and then a downward line in the bearish scenario, which we can see here. And it can be used in any market by drawing connecting peaks or valleys to find easily identifiable levels of support and resistance. And when drawn correctly, they can be devastatingly accurate and really give you the upper hand at identifying where price may be headed so you can plan your entries or exits accordingly. And they're very simple and they're very effective. That's the premise of UTG and what we teach our students. Simple works. You don't need to overcomplicate things. You can definitely start to refine things with indicators, which we're going to show you in some of the preceding videos. But really, keep it simple, develop a strong strategy and stick with it. So uptrend lines, which are consider them your lines of support. They're the money makers, unless you're shorting the market, which we highly advise against as beginner traders. Leverage, shorting, longing, all that sort of stuff. Don't worry about that as a beginner trader. Worry about that when you've built more confidence. So these upward trend lines consist of a positive upward slope in which the second low of the point must be higher than the first. And it indicates an increased buying pressure or increased buying volume. So we always want to ensure that these swing low points are higher lows, higher lows, higher lows. It shows us that demand is higher and the bulls have hold of the current time frame they're trading on. As long as the price remains above or on the trend line, that trend line remains intact. And we'll talk about breakouts in just a second. So downward lines or the downtrend line, which are your resistance lines, it is equally as important to identify potential trend reversals and is again strongly confirmed by connecting 3 or more points on a chart. So we've got 2 points there to say, all right, we're taking interest, we're taking attention, we're paying attention to this line, and then 3 lines or 3 points, touches on the line confirms that we have a verified trend line. And we can also see we've got a 4th touch here. We don't worry about this. This is what's called a false breakout that we'll get to in just a second. We can see we've got 1, 2, 3, essentially 4, 5 very strong touches on this line, which indicates a very strong point of resistance. It tells us that the bears are in control of the market with increased selling volume and decreased buying volume. So at these points here, we would have seen an increase in buying volume. And then as we've approached here, the buying volume has dried up and the selling volume and the bears have taken over. So it's at this point here where we would look to exit the market, saving all of this. We've exited the market, saving all of this long-term heartache, depending on what time frame you're trading on. So how do you draw your trend lines? Well, when drawing your trend lines, focus on major swing points and ignore all the other noise on the chart. It's particularly true if we're trading on the 4-hour or the 1 day. When you start getting down to the 15, the 30, the 10-minute, the 5-minute, God forbid you're trading on that, there's a lot of noise on those lower time frames. So as swing traders, which is what I classify myself as, and a lot of our students where we let the trades come to us, we are trading on usually the 4-hour and above, and even the 1-day time frame is far more common in a market like FX, where the trades take a little bit longer to play out. So we want to ensure that we're drawing out our lines on the major swing lows or the major swing highs to identify the trend. So as you draw your trend lines, choose to either use real bodies or wicks, or a slight combination of both. Trend lines will never be exact in some cases, but try to focus on a common touch point. I myself, I try and use wicks because it sort of gives you unless you have really, really crazy wicks, which you see on lower liquidity coins, like lower alt cap coins, and even on BTC to a degree. You don't see it as much on a regulated market like FX, where there's a lot more money in the market. But by connecting wicks, I believe it gives you a little bit more of an indication of where the price was as opposed to the real body, so you can set your stop losses or even your buys a little bit more accurately than if you were just to use the candle bodies themselves. But hey, that's just my personal opinion and how I trade. You find out what works for you and stick with it. But just don't go crazy connecting the points that simply make no sense to confirm your own bias. And a lot of traders do that. They'll go to a wick to a body, to a wick to a body, to a wick to a body. And you see it, you know, there's a million lines on the chart and nothing really makes sense, but we keep drawing lines until we confirm it. So, yep, that's what we believed in originally. Don't be that type of trader. So false breakouts, as we can see on the chart below, and just like we saw with support and resistance as well, price can often break out from these trend lines, which tells us that a reversal may be incoming. And the keyword there being may be incoming. So when these trend breakouts occur only to return to trend a candle or two later, we call that a false breakout, which we can see here. So one mistake new traders often make is buying at these support levels, as we would have seen last week, or selling at support levels, resistance levels rather, without waiting for a confirmation of what the trend is actually doing. So if we had a bought here rather, thinking that we had broken out from the trend, the very next candle gave back a lot of that profit if you were riding it from down here or even from down here. And the same thing can be said here. We've had quite a strong breakout above the trend line. We didn't quite get there here, but we had a solid breakout above on this candle. We would want to try and wait a candle or two more to find out whether it's a confirmed trend breakout, or in this case, we've given it all back and then we've given it all back again. This was quite a strong level of resistance. So you want to respect that by looking at what the preceding candles are doing and how they're closing before making a true decision. Don't worry about trying to catch this little bit of percentage. If you buy up here, that's fine. You know, screw this little bit of percentage. You would much rather be buying up here, losing a bit of percentage here than buying here and giving all this back. So buying and selling breakouts, breakout trading can be very profitable. There's no doubt about that, although it does require a little bit more time in front of the screens unless you've set your positions already. And if you're planning on trading in smaller time frames, there's a lot of noise there as well, which we know. But how does it work? So in an uptrend, in an overall uptrend, you want to wait for the price to pull back. And then using your trend line, we can see that this is a level of resistance. Once we have a confirmed breakout here, you would then choose to enter, and then you would ride the trend up. And again, you would look to maybe set your buys, your sells here rather, if you've got a little bit of information here telling you that this was a strong level of resistance. And then again, you wait for the breakout and then you purchase again with a confirmed breakout. Same thing can be said here in an overall downtrend. If this was your level of support and you purchased here and you have ridden the trend up, made some pretty good profit there, and you didn't quite get the top, that's all right. But you can see here, once we've broken below the trend, we've got a pretty solid downtrend. There's a lot of blood. So you are better off selling here, or selling here even, by riding this, by enjoying this bit of profit, not worrying about catching the top, than holding here, hoping for it to return to the trend and then losing all of this these sats or this money here. I would much rather give a little bit back than try holding or giving all of this back to the market. So you can better time your entries using support and resistance. You can find better trading opportunities by being patient and trading near the trend line, whether you're buying or selling. This will improve your risk to reward ratio by allowing you to have a tighter stop loss on your trades. You can also use candlestick patterns as shown in episode 1, like your bullish engulfing, your morning star, your dojis, to better time your entry. So we can see that we had a decent level of resistance turn support. So we had a support and resistance flip here. We've gone up, we've come back, we've touched this level of support once again, and then we've taken off yet again. And we can also see here, we had a pretty impulsive move here from this support line. So we know that when we come back to this line of support again, there could be an opportunity here to get another pretty good run off, which we did indeed. So we can see we've got our trend line here. So we've got, not only do we sort of have a trend line confirmation because we've bounced off pretty strongly and continued upwards, we've also got a bounce off this horizontal line of support. So we've got trend line support and horizontal support, and a pretty confirmed bounce off of there. So that's a good way to buy using support and resistance paired with trend line support as well. You can see you would have made 64% on that trade. Pretty damn good. So pay attention to your angles as well. The steeper the trend line, the stronger the trend is. These steep trend lines occur after a sharp price move up or down and are unlikely to offer a meaningful level of support or resistance. So meaning the sharper the angle, the more unstable it could be short term. So take note of this when looking to enter a trade. A steadier long-term line, trend line may yield better results for a beginner trader without having to worry about violent corrections. And as we know, when you see very, very strong wicks, 10, 15, 20% wicks in a short period of time, a lot of the time we often see the market give that back in the next candle. We could wick up 40% and then wick back down 45%. So as beginner traders, we don't try and catch those violent moves or jump on thinking that price is going to continue unless we've got a very strong indication using buying volume indicators. There might be some sort of fundamental news perhaps, but even at times where we see fundamental news like ENJ, we see that last for a short period of time, and then overall it gives all those profits back, unless we really know it's a confirmed move to the upside. It's going to continue. So after every big move up, there's often going to be a move down. So pay attention to that as a beginner trader, and if you miss it, you miss it. So a couple of points to remember too. The more times a trend line is touched, the stronger the trend is. It takes at least 2 touches to start the trend, but 3 to really confirm it. The more, the better. Focus on major swing points. Ignore the noise. Focus on those major swing points, particularly is another reason why we trade on the 4-hour or above. When we're not scalping, we find those major swing points, and don't force them to work. Use your bodies or your wicks. Try not to combine both too much unless there was some really violent wicks to the upside and it came straight back down. Then you could potentially use your real body. Don't try and draw a bunch of lines and a bunch of shit on your chart to confirm your own bias. Find a solution, find a strategy, stick to your strategy, and if it doesn't work out, then you move on to the next trade. So if you've got questions, get answers, and join the UTG community. You can join us over at YouTube, Facebook, Discord, and Twitter. Discord is where most of the action happens, where Don, Ads, and I are sort of frequently there. You can come into the dedicated beginner channel and get questions, get answers to questions. Don and Ads and myself are always there. Don and Ads are the man when it comes to this sort of stuff. They'll have all of the answers, as will I, too. Come over and join us. But right now, let's jump into the charts with Ads and find out how we can use this in real time. And we'll see you next week.
Thanks, Ty. So now we're going to have a quick squeeze at trend lines on AUD CAD, which is Australian dollar, Canadian dollar on the 1 day, where this works really well on trending markets where price is going up or going down for long periods of time. And then we can use our trend lines to determine where price is going to get to before it either reverses or keeps going in that direction.
And we can see one thing here too, Ads, as well, being the fact that this is a regulated market, like what we've said beforehand, far more money in this market, trillions of dollars in FX over the year, as opposed to billions or hundreds of billions in crypto. So we can see that here, can't we? We've got this huge level of volume here, which helps to draw your trend lines or your levels of support and resistance. And it's probably going to be far more respected, I suppose, than what it would in crypto, because you don't have these, with the exception of these ones around here, of course, you don't have these crazy wicks or these crazy moves. And this is on a daily chart, mind you, not a 4-hour chart. So I've got a lot more information here to give us a clear indication of where things might be going.
That's right, Ty. So we'll have a quick look and see where we can identify these levels and see how that would help us trade. So if we rewind the chart just a little bit, maybe say back here. Now we know that Ty mentioned that there has to be a few touches to validate these lines and know they exist. So immediately looking at this chart, if this was where you would be seeing it, you'd be looking for maybe something like that. What we reckon, Ty? Something like that?
Looks pretty good to me.
And just like that, using no other tools, we can see what happens to this.
It's respected.
That's it. So if you were to be jumping into something like this and shooting for prices higher, so if you were looking back and looking for your resistance, like we did mention in the previous lesson, you would know that resistance would be somewhere around here, okay? Looking for previous touches above where price is now. And using your trend line, you could be picking it up off here and selling it at your resistance level for a healthy trade.
And we see that might only say 3.88%, but when you're trading on leverage in FX markets, that's hundreds of percent gain. And you can see down the bottom here as well, we've had this run up, we've had this increase in volume here, and then as we've come down, we've seen quite a large selling volume here to indicate that this is headed down. And we don't really see anything clearly here in terms of buying volume to indicate that we're sort of going to head back up just yet.
That's right. So we'll clear this chart and we'll see if we can find any other trend lines.
And look at that, we've really only just been using support, resistance, and trend lines so far. We haven't overcomplicated things with a ton of indicators or fibs and Murrays and Bollingers and MACD just yet. We're just purely looking at support, resistance, and volume.
So the next one that I want to really have a look at is this one here. We'll step it back a little bit. And if you were looking at the chart and this is what you were seeing at the moment, and you wanted to know when this instrument is going to reverse, going to start moving back up, really easy way to tell with our trend lines is we start drawing them down, okay? So we know that there's been multiple touches all the way through, and we want to see where this is going to start moving back up. So we keep coming down. So we've clearly broken through the trend line. It has closed above. So we know that there's a 99% chance that this exhausted move down is coming to an end, and this is going to start to trace or impulse back up. Okay. So what we'd be doing now is if you were going or buying into this instrument, if you were buying it, hoping that it's going to go up, and you were looking for targets above, so you'd be looking for your resistance that we spoke about last week, and you'd be looking for lines where price may get rejected. All right. So buying the breaks in trend and selling the resistances above where price is currently.
Mm-hmm. And look at this. We're seeing an increase in buying volume.
So there we are. You would have something like this would have been your trade. You're buying the break and looking for price above. Simple as that, Ty. Simple as that. It needs to be nice and easy.
Yeah, absolutely. And again, it's not to flog a dead horse, but keeping it simple, Sally, is the best way to trade these markets. Of course, when we really want to start getting down to the smaller time frames and we really want to start picking things up at very accurate levels, that's when we'll start throwing in some indicators and a couple more advanced techniques, which we'll show you over the coming weeks, where you can really start upping your game. But do not move on to any other videos or PDFs that we release without mastering these techniques. It's not wise to flood your brain with all this information and have this paralysis by analysis mentality where you're going, what the hell do I use? What the hell do I do? Master your support, master your resistance, master your trend lines, and then move on. If you're having any troubles, come into the Discord, unitytradinggroup.com, and join us. Ask the questions and get the answers you need to help you out with this. And let's see you again next week.